What's up, everybody? Welcome to today's episode of The Daily Dose. Today is Wednesday, September 7th. And following 3 weeks of a lot of down pressure, and really our first big green day since the Jackson Hole speech, we were up pretty heavy in the markets today. The S&P 500 finished up 1.83%. The Dow Jones was up 1.4%. The NASDAQ was up 2.14%. A little bit of a relief rally today. We're still down a lot, obviously, year to date, with the Dow down 13%, the S&P down 16.5%, the NASDAQ down 24.5%. Today we saw oil fall to a 7-month low. Crude was down 5.7% today at about $82.32 a barrel. And obviously we had the big Apple event. They debuted a lot of new products, which sent their shares higher, which kind of brought the rest of the market higher as well. And then this article kind of talks about how the Fed is approaching the next rate hike, and it looks like that they still could be in for another 75 basis point hike, which is kind of what sent the market lower after that Jackson Hole event in the first place, that they were going to remain super hawkish and keep the economy really tight. Let's take a look at the S&P 500. Right off the bat, I just want to say I added a channel line here on the bottom. So basically in a bear market, your trend line is the line that runs on top because that's the trend guiding it lower. In a bull market, that would be reversed. So the trend line would be on the bottom guiding it higher. And then in a bear market, your channel line is what is kind of capping the falls, or what you see the trend is in that cap when it falls. So for this channel line, I started it after the first major decline from the peak, and it touches a few times, and the most recent time it touched the channel line was from the June lows, so I think it makes sense to have on the charts. And then just for reference, in a bull market, the channel line would be like this line right here on the top of the market, so they're just reversed in a bear and bull market. But let's zoom in a little bit and take a look at what happened today. So after we saw this bounce off the bottom of this zone that we had mapped out, we figured that there could be a little bit of chop in the markets, and that's exactly what happened today. We got to the very top of the zone and then sold off just a little bit, but it did respect the top of that zone that we had, so that's always good to see when your zones are prevalent in the market, and ours have been. Also, just I hate that it keeps taking off the 200-day moving average. I hate that. But let's get the 200-day moving average up there just to have for reference. Right now it's kind of riding along that trend line. And when we break through this trend line and when we break through this moving average, to me, that'll signal the end of this bear trend, the end of the bear market. But obviously we're a long way from there. I do believe, it is my personal opinion, that this is just a relief rally, and if we do end up breaking through and going higher, say we get up to this zone here, I do think it's just another bear market rally. Don't think it's anything to put a lot of weight into. There's a lot of really negative things that still haven't played out globally yet that can affect markets, i.e. the energy situation in Europe right now. That's putting a lot of pressure on their entire economic system, which would obviously affect ours if it were to start collapsing. So I just think there's not a lot to be super optimistic about at this point. Really, the only thing that would send these markets higher is the best perfect case scenario, and then nothing can really come out and surprise you to the upside. It's really all to the downside, in my opinion. Obviously, that might not happen, but that's just what I've been seeing. Let's take a look at Bitcoin, because Bitcoin is holding on for dear life, no pun intended. Bitcoin's in this last little zone, kind of touched it and broke out of it today, but it has to hold. If it breaks through the bottom of this zone, the 17.5 to the 17.7, we're headed to 11,000 at least, in my opinion, because there's nothing holding it from going back down to these levels. So that's just my opinion, but there's really no support to hold it up after it breaks through that level. So that would be really ugly. I'm interested to see what happens in Bitcoin. But other than that, yeah, It's going to be really interesting whether we get a little bit of a relief rally, whether we get some chop and then a relief rally, whether we get some chop and then a sell-off, or whether we just sell straight off. So be sure to stay tuned this week. If you like this type of content, every day the stock market is open, we release a short little video like this. And every weekend, I release a longer video called the Weekly Wrap that goes more in depth and has some more analysis in it. If you haven't watched this weekend's episode, be sure to do that. We talk about Cathie Wood and how she's calling a bottom in the equity markets, more specifically in her sector of stocks. So be sure to take a look at that, because that was a really interesting one. And be sure to subscribe if you like this content. Follow us wherever you listen to podcasts. And until then, thank you for listening.